Assalamu alaikum wa rahmatullahi wa barakatuh. Alhamdulillahi rabbil alameen wa salatu wa salamu ala nabi al-amin wa ala alihi wa sahbihi ajma'in. Rabbi shrah li sadri wa yassir li amri wa hlul uqdatan min lisani yafqahu qawli. Allahumma la sahla illa ma ja'altahu sahla wa anta taj'alul huzna idha shi'ta sahla bi rahmatika ya arhamar rahimin. Amin ya rabbal alamin. Dear brothers and sisters, today inshallah I'll be talking on Islamic financial markets. So here I'll be, as you know, that financial market is one of the very important platform for the rotation of funds from the deficit unit to the from the surplus unit to the deficit unit. And Islamic financial markets are quite different from the conventional financial markets because of the prohibition of riba, gharar, and maisar. There are alternative mechanisms for Islamic financial markets. So today I'll be talking on two important markets. One is the money market, and then Islamic capital market, and from the capital market I'll be talking on the equity market. So Islamic financial markets broadly can be divided into three, which are the money market. So money market are where the short-term instruments are traded, is usually less than 1 year. And then the Islamic capital market. So capital market is where the long-term financial instruments are traded, usually shares, sukuk, as well as some other equity-based instruments like ETF are traded in the capital market. And there is a third one is the derivatives market. So derivatives markets are where the Sharia compliant derivatives are traded futures, Islamic futures, forwards, Sharia compliant swaps and options are traded under the derivatives market. So Islamic derivatives market is basically the instruments are basically for hedging, used for hedging purposes to mitigating the risks of the firms. So first let us talk about the money market. So what is this Islamic money market is all about? So as you all know, the money market is where is actually very important for liquidity management. And so usually in money market, the short-term financial instruments are traded that has a very short maturity and is very liquid to sell. So however, the money market, that there's no it's not a formal market where it have we call the exchange. No, rather it is it's an informal market, and is the trading are done based through the networks between the banks, brokers, dealer, and other financial institutions. So that are linked to electronically. And money market is actually the players are usually the big players like the governments, the institutions. So money market is very much needed for financial institutions to manage their liquidity, as well as for the government. Money market is also important to maintain their liquidity cash needs, like to pay salary for their employees. So now, why this Islamic money market is important, or how they are different? So to begin with, we need to talk about that the liquidity is equally important for Islamic financial institutions, same like the conventional. It can be called as darurah, or the extreme necessity for Islamic financial institutions. It is the blood in human body. So liquidity is same like is so important, like the blood in human body. So without liquidity, a financial institution cannot function. As an example, in 2001, Ihlas Finance House is a financial institution in Turkey, was closed due to liquidity problems, and also as well as with the financial distress. So for the survival of Islamic banks, it is very important to have an Islamic money market. However, the conventional money markets are not Sharia compliant because it involves riba, garar, and maisir. So all the prohibitions are there. Therefore, there was a need to have an alternative to the conventional interbank money market. So Malaysia is believed to be the first country in the world to establish the Islamic interbank money market for the smooth running of an operation of the Islamic financial institutions in the country. So the first money market was introduced in 1995 in Malaysia. So, based on what we have discussed, the differences between Islamic and conventional money market is that the conventional money market, usually the instruments are debt-based, and then for is debt-based, and there is interest involved in it. But for Islamic money market, the instruments, they are Sharia compliant contracts. They are not always debt. There might be debt, there might be sale and purchase, there might be equity partnership, but there should be a contract. And then for Islamic money market, they should have also get approval from the Sharia Advisory Council of Bank Negara Malaysia before their issuance. However, for conventional, there is no need other than the regulatory authorities approval. Islamic money market instrument are tight. There is an underlying asset, and then equity and debt. So there is sometimes assets, there are equities underlying that contract. On the other hand, the conventional money market instruments are solely based on debt. Islamic money market, it caters both Islamic and non-Islamic investors, while the conventional investors uh, can only invest in the conventional money market. However, sometimes the non-Muslims uh, uh, can come to Islamic money market. And then for Muslims, maybe there are some Muslims, if they may go to conventional, but all Muslims, according to the Sharia, should invest into the Islamic money market. So these are the main players in the money market. So usually the big corporations, non-bank financial institutions like Bank Rakyat and others, the central bank, some their principal, and dealers, the brokers, as well as some dealers, stock dealers. They are the players. The government treasuries and the banks, the Islamic commercial banks or non-Islamic commercial banks. So they are usually the players for money market participants. As the the uh, public are not allowed to enter money market, given the fact that the minimum investment amount is sometimes 150,000, or sometimes minimum is 50,000. So it doesn't really work well with the public, as well as is through this market. The transactions are done through the systems electronically. So individuals, some of them may do, most of them, they do not have access to enter into this electronic system. So there are three main functions of Islamic money market. They exist to cater the three important jobs. The first is the liquidity management for financial institutions as well as the government and others. If they run out of cash, any Islamic bank runs out of cash, they can go to money market and immediately borrow from the money market or cash based on the contract use. And then second is the secondary trading of money market instruments. So once the money market instrument is issued, so it can be again traded among the players in the secondary markets. And the third is a channel for the central bank to conduct its monetary policy. So through this interbank money market, the central bank can implement the monetary policy. It can increase the profit rate for the banks to borrow as well. So that actually can have an impact on the um, on all the financial institutions in the country. Similarly, through the money market, the government can issue securities like short-term sukuks as well as some other Islamic money market instruments in order to either take out cash from the economy or to pump in more cash in the economy. So these are the monetary policies that can be implemented through the Islamic money market. So in Islamic money market, there are two components. One is the interbank money market. So it's a transaction between banks, between the Islamic banks, Bank Islam with Maybank Islamic, for example. So these are one type of component. Another type is the trading of Islamic money market instruments. So there are some money market instruments and they are traded, and these instruments mostly issued by the government. So first we look into the interbank investment. So in the interbank investment, one of the famous one is the Mudaraba interbank investment. So when one bank is a deficit bank, it needs liquidity, it needs cash. At the same time, there is another bank and it has a lot of cash, it's a surplus. So it is also not good for to keep a lot of surplus for that bank. It's better for him to invest and to get some return. So in the Mudaraba, a surplus bank will be the Rabbul Mal. So it will place its excess funds for a limited period with a deficit bank, the bank that needs liquidity, that which is called a Mudarib, on a pre-agreed profit sharing ratio. So they will share the profit and loss based on the ratio, and then if there is a profit, so it will be shared between the investing bank and between the investing bank as well as the bank which is Mudarib. So the minimum amount of investment is 50,000. Okay, it's a quite big amount, and the tenure can be from overnight to 12 months. So here the profit charged based on the nights. However, the maximum is 12 months. Okay, so here is this is the um, figure for how the Mudaraba interbank investment works. So here we have Rabbul Mal, which is the surplus bank here, and then this is the investee bank, the Mudarib, which is the deficit unit. Okay, it needs fund. Okay, so they so they do an agreement with the surplus bank. So surplus bank will pump in money in the investee bank, and then the fund will be the invested by the investee bank, and then if there is profit and loss, so it will be shared based on X and Y. So if there is profit, will be shared, but if there is loss, so the loss will be solely borne by the Rabbul Mal or the surplus bank that has shared the capital with this bank. So this is how simple it is between the banks. So this is very effective for banks to mitigate their liquidity as well as it, and because it is very fast and it is done through electronic transaction. So other than interbank money market, there is also something called murabaha. Well, Mudaraba is a bit higher risk, got higher risk because there is a profit and loss sharing, and maybe some surplus. Maybe some banks that have surplus amount of money, they are not interested to get mudaraba, profit and loss. Rather, they want to have a fixed return. So, in order to serve their interest, another contract or another instrument way is the commodity murabaha, or the other name is the tawarruq. So tawarruq is used, and this tawarruq is something that somebody buys an asset and then on cash or credit basis, and then sells it to other party on cash. So so the objective in tawarruk is actually one of the party needs to get cash, and then the other party who gives cash actually should get have some profit. So that was the actually objective of using the concept of tawarruk. And by purchasing, and in this tawarruk, usually there will be an underlying asset. In Malaysia, there is something called Bursa Malaysia Suq Silah. It's a commodity market under Bursa Malaysia's arrangement, where the clients can will be linked to a lot of commodity brokers. So there are many, let's say hundreds of crude palm oil brokers in Malaysia. So all will be joined into that platform electronically. So the clients or the bank usually will be able to contact those broker and then buy. So the underlying asset used in this exchange is usually crude palm oil in the case of Malaysia, where in other countries like GCC they use aluminium. So now how the murabaha work? Okay, so an investing bank purchases an underlying asset, say the crude palm oil, from a broker, and sell it to the investing bank at cost plus, with an agreement that it pays the investing bank on a deferred payment basis. So it is first buying a commodity on cash from a broker and then selling it on cost plus profit to the deficit bank, and then the payment will be deferred. The investing bank may then sell the commodity to another broker on a spot basis. So at this, after the first transaction, after buying the commodity from the investing bank, the investing bank, if it doesn't want to keep the commodity, it can just sell to get the cash. So here is the structure. So we have here broker A, we have broker B. So the investing bank, the bank that has a surplus, okay, and so what he will do, he will contact this broker, and then he will buy a commodity, okay, and he will pay to him. So after now the investing bank become the owner, he will sell that commodity to the investing bank with cost plus profit. Let's say the investing bank here, he bought that asset with 1 million, okay, but he will sell it to 1.5 million with a deferred payment. So here the investing bank, okay, so he bought the asset. So now he is the owner of the asset. So what he does, he doesn't want to keep that asset. He will sell to another broker, let's say broker B, at cash price, and then the cash price again, 1 million, for example, okay, at that time. So he will sell that asset to broker B, and then he will get the 1 million cash. So with this is the investing bank, which is a deficit unit. He can fulfill his needs of getting cash, and at the same time, the investing bank, who has a surplus amount of money but who is looking for profit, he also can make profit from this transaction. The 0.5 million can be his profit. So here, what is the commodity murabaha is better is in terms of the contract, the profit. The profit is fixed for this because it is a sale on credit with a profit. The profit is fixed, and however, it is a debt-based contract, and sometimes the commodity murabaha is also criticized, same like by Ulina, as there are issues of commodity murabaha when there sometimes the real transaction doesn't take place, the ownership transfer doesn't happen, okay, and sometimes the broker A and B, these are brokers, have relation with the investing bank. Sometimes they are the subsidiary of the investing bank, so that actually triggered the issue of hila or legal trick. But still, with the development of Bursa Malaysia Suq Sila commodity broker that has real products and they allow delivery in case of need, so it is now better to use the Tawarruq using the commodity murabaha platform, the Bursa Malaysia Suq Sila platform. Okay, so now we go to the another component of Islamic money market, which is the trading of Islamic money market instruments. So the interbank investment is one thing where one bank invests in another bank, but here is about talking about some money market instruments that will be bought, that sometimes also are bought and sold in the secondary market. So uh, it is this trading of Islamic money market is more flexible because the instruments can be easily traded in the secondary market. And money market instruments, they refer to short-term investment papers, including long-term instruments such as government securities. So money market instrument will have something investment papers, which is short-term, less than 1 year. Uh, so these are the instruments that is actually can be sold and in the secondary market and can be bought by others. So I'm giving you one of the example. There are many Islamic money market instruments like government investment issue. There is Islamic treasury bills. There is Islamic bankers acceptance and some other. However, I'm going to give you one of the example, which is called the government investment issue or GII based on Sharia. So it was introduced in 1983 as government investment certificate using Qardul Hasan concept and then replaced as GII. So it is based on Bai'ul Ina, sell and buyback agreement. So usually BNM will identify, so when the BNM wants to issue this GII, it will identify a Sharia compliant asset. So there should be an underlying asset and then invite tender for Islamic financial institutions for the asset. So it will open tender. So who will pay the good price, which will offer the most competitive price, will be selected to be the buyer as well as the investor and gets to buy the asset on spot. Based on the bid, which financial institution will put the most competitive price, he will be chosen to get this GII. So the investing bank in turn will resell the asset back to BNM. So here we have BNM and the investing bank. So BNM is the deficit unit. So the investing bank, which is the Islamic commercial bank, okay, will in turn will resell the asset to Bank Negara on the principles of BBA on deferred basis if the coupon to be paid periodically. So here what happened is that the Bank Negara will sell the assets on cash basis to the investing bank, and then after buying the asset, investing bank again will sell back that asset to Bank Negara with a deferred payment basis with a profit. So this is how the Bai'ul Ina works. So when there's a deferred payment on installments, then this is called using the concept of BBA, where there is a coupon payment, means there is a periodic payment of the profit. However, if there is a lump sum the payment, then they will use the concept of murabaha. So government investment issue, while the investing bank reselling the asset to BNM, Murabaha will be used if the GII is a zero coupon instrument. So if there is no coupon payment at the middle, and at maturity BNM will pay. So they will use the concept of Murabaha. The debt incurred by BNM through the above transaction is securitized in the form of GII. So, based on the Bai'ul Ina that just I mentioned, okay, the bank Negara will sell an asset for cash, and then uh, uh, Bank Negara will again buy back that asset for a deferred payment basis. Uh, so that's based on that. Actually, there is a debt obligation is created. The investing bank is and has a receivable is entitled to receive an amount. So that receivable amount can be transferred into this certificate, which can be called the government investment issue, and that certificate can be sold in the secondary market if the financial institution is not willing to hold it longer, then it can sell in the secondary market. So the investing bank can either hold or sell the GII in the secondary market. So at maturity, BNM redeems the security by paying the full purchase price of the asset or face value of the GII to the investors. So the investing bank, it can keep until maturity, until let's say 1 year, or the investing bank also can sell to other party the asset, and based on the calculation. So now here, uh, if there is it is one lump sum payment like zero coupon bond. So the BNM will redeem the security at the when BNM will pay the full price of the asset, or which is the face value. So that is the government investment issue. However, there is a Sharia issue in government investment issue based because it is when we trade the GII in the secondary market, it can involve by uddain, means then selling debt, which is not allowed in the Sharia when selling the debt, and the price is not equal. See here, when the when the investing bank, okay, will have that certificate of debt, okay, or receivable, so it can sell it that certificate in the secondary market, and mostly the price in the secondary market is lesser than the face value. So it is like exchanging money for money without equivalence. So it can lead to riba al fadl. So that's one of the issue in the GII. However, lately I have heard the GII also has changed to Tawarruq, so which is better than INA. So that was all about Islamic money market. So of course there are so many products and instruments in Islamic money market as well as Islamic interbank. So I just give you one examples of each of interbank investment as well as money market instrument. So with that we can see that how the Islamic money market is different than the conventional. So now I'll be talking on the capital market. So capital market is something where the long-term securities are traded, and usually it will involve shares and bonds, as well as the derivatives instruments. Okay, so Islamic capital markets is actually catered for long-term financial instrument with maturities, like shares is for long term, or sukuk also, the bond is also for long term as well. So the transaction usually in capital market, it has a formal platform like Bursa Malaysia, the stock exchange, or sometimes there is the OTC, or the over-the-counter transactions through the brokers. It is in some countries there are still, but mostly it is also through online, and usually there will be a screen to list and show the performance of different shares. So under this Islamic capital market, there are two important components, which are the Islamic, the equity market and sukuk market. So sukuk market is mostly sukuk is alternative to conventional bonds. So that's mostly sometimes debt based, or sometimes it is also musharaka, or partnership business. However, there is equity market. Equity market is always based on equity. The shares where the Sharia compliant shares are traded. So today I'll be focusing on the Islamic equity market or Islamic share market. So if we look into Islamic share market, so we will find the Islamic share market involved, of course, the Sharia compliant stocks or the shares that are listed in different indices by different um, uh, index providers. So this Sharia compliant, other than Sharia compliant stocks, there is a Islamic mutual fund. So mutual fund is where is a company that will pool the fund of a lot of their clients, and then they will invest. So basically the concept used here is musharaka, and these mutual funds, they are also listed in the stock exchange. Another important segment is Islamic private equity. So Islamic private equity is same like Islamic mutual fund, but it is for high net worth individuals. So it requires a big amount of money to invest, as well as it doesn't require to pay first. Rather, if the high net worth individuals, if they commit, they promise to transfer their funds gradually, so that can be done. So Islamic private equity is they also pull money fund from the high net worth individuals and invest. So it's more like a private version of the mutual fund. And then there is Islamic ETFs. So ETFs is a basket. It includes a basket of shares. So instead of buying one share of a one company, it is better to buy one share that represents 10 companies. So that is how the ETF works. So ETF will buy the shares of big companies, of a group of shares. So with that, the risk is mitigated. So that's why the ETF is quite famous, because for those who are passive investors, it is better for them to invest in ETF, which is actually yeah, it will have a basket of shares. So instead of buying one share, you like buy 10 shares. And there is Islamic REITs. So Islamic REITs also like public mutual, or something like a mutual fund, where they pull fund from the public. However, its focus of investment is only on the real estates. So that's why it is called Islamic REITs. So they pull fund and then they invest only in real estate. So their income is coming from the profit gained from the real estates development. So now come to the Sharia compliant share. How to make sure the one share is Sharia compliant. And as you know, there are a lot of providers. There's Dow Jones, and then FTSE and others. So they have a list. They list down the Sharia compliant shares. So here today I'll be sharing with you on the Sharia compliant Sharia compliance screening of a share by the Securities Commission of Malaysia. So Malaysia actually used to be considered the first country that has that developed that filter to list the Sharia compliant stocks. And then after that, the Dow Jones in 1999, it also developed the Islamic World Market Index, where it will show the list of all the Sharia compliant shares based on their filters. And lately, there are so many these Sharia screening methods. So there are starting from Malaysia Security Commission, and then there's FTSE, Dow Jones, MSCI, Standard and Poor's, Times. So there are many. There are also, even though there are many criteria or many, however, more or less they are same. They only have little variance, differences in terms of the filters. Uh, so let us look into the Sharia screening of stocks in Malaysia. So at first, the Malaysia will look at the core activity of the company. So it should make sure the core activity of the company, its operation is not based on riba interest like bank or insurance companies. So all these are based on riba and maisir and garar. So these are the companies, firms will be excluded. So at first they look whether the core activity of the company involves any kind of riba, garar, or maisir. So if any company's on the its original business involves this, they will be excluded. And then there are some companies, their core business is not uh, something that involves riba, garar, or maisir. However, their income are mixed, means that they are not 100% Sharia compliant income. Means they have, let's say, 95% or 99% Sharia compliant income, but 1% they have non-Sharia compliant income. So this is called the mixed companies, and so there was a discussion whether these mixed companies can be listed as Sharia compliant or not. As we know that if we are a company that has 99% Sharia compliant revenue, but only there's little 1% or 2% of non-Sharia compliant activities. So if we list it as non-Sharia compliant, so it is actually doing injustice to that company. And if we do that, there will be no more Sharia compliant company. So given the situation, the Darura factor, where the Islamic finance is very little, the Sharia scholars, based on considering the contemporary reality, they agree that the companies that have a certain extent of non-halal income can be considered. So how they do it, uh, that the core act, uh, so the Sharia Advisory Council of the Securities Commission of Malaysia, so they will see the company that again look into it and say that whether the core activity is not forbidden, and also they look into the public perception of the company that this is a mixed company that has a mixed income, but the public has a good perception and the company have maslahah, that public interest, it brings benefit for the community. And the haram element or the non-halal income is actually achieved is due to something darura, or something because of common plight, the umum balwa, because of the business, the uruf fasid, or the bad uruf, the custom that is in running in the business. So because of that, because of the necessity, and also because of the rights of the considering the rights of the non-Muslim community. So so if the company has this criteria, so they will try follow to the next step. So the next step is they will do quanti and qualitative method. So the quantitative method is to get first the earnings, the total income or the revenue of the company, and also to get the PBT, the profit before tax of the company. And after getting the first step, and then second is identify or the measure the income or earn or revenue from the non-halal source, as well as also to get the profit before tax from also the non-halal halal source. So once we get these two, and then we have to follow this formula. So we have to divide the earnings from the non-halal activities, the revenue from non-halal activities. We have to divide with the total revenue of the company multiplied by 100. And then secondly, we have to get the profit before tax from non-halal activities and divide by the profit before tax of all the activities of the firm, the total PBT, and multiply by 100. And the answer should not be 33 and more. Okay. Oh, sorry. So the answer. Okay. So there are different criteria of, after when we get this answer, and then we need to measure it with the criteria set by the Securities Commission. So there is 5% benchmark and there is 20% benchmark. So if the non-halal income is something from obvious sources like riba, okay, or non-halal products, so that profit before tax or even the total income should not be more than 5%. Means that from the A and B, okay, when we divide this, we should not get any answer, okay, which can exceed the 5%. So the benchmark here is 5% threshold level mark. So companies whose earnings and profit before tax from non-permissible profit means total revenue, or the PBT, profit before tax from the non-permissible activities, is more than 5% will have their stocks excluded from the list of Sharia compliant shares. So if 5% is fine, but if more than 5%, it will be excluded. And then there is also 20%. Okay, so 20% threshold is for hotel and resort operations. Means that these are doubtful incomes, income from hotel businesses, because most of the hotels, they are not fully Sharia compliant. Sometimes they serve alcohol, sometimes they have disco. So all these hotel, resort, and even share broking business, like conventional share broking businesses. So all these are doubtful income. So if a company has income of this type, so that shouldn't be more than 20%. Both their profit before tax as well as their total revenue should not be more than 20%. If there are, if it is more than 20%, it will be excluded from the list. And then there is also lately there is also other financial screening that in Malaysia, that in the past it was not, even in other places or other index screeners, they already have it a long time ago, but Malaysia got recently, that the cash placed with conventional bank accounts divided by the total cash should be less than 33%. So if any firm has cash in conventional bank, it should be less than 33%. And then the second one, which is the most important, which is the debt ratio. The debt divided by the total asset should be less than 33%. So that if a company has a debt of 33%, the company share will not be Sharia compliant. Why? Because if a company has, substantial amount of debt, so it is not really equity. So in order to be an equity share, it should have at majority should have a share. So the debt should be less than 33%. So which is a minor, so it can be and be considered. And then after the company has passed all these criteria, the quantitative criteria, so there will be again a qualitative assessment. And this qualitative assessment is case by case basis, where they will look into the image of the company, the maslaha, whether the company brings benefit to the ummah as well as, and then they will look into the non-permissible activity, whether it is, due to darura factor or there are some other kinds. So here one of the example that I can remember is like the share of previously, of course not now, the share of Malaysia Airlines was not Sharia compliant, even though they have passed the quantitative benchmark, because there was a bad image of that company to the public, and they used to serve alcohol in their flights. So the people have a bad image. So because of considering that factor, the Malaysia Airlines was not given the Sharia compliancy was not listed as a Sharia compliant. So there are maybe many companies that they uh, the Sharia scholars they look into. One of the issue is like the companies that produce these contraceptive items like condoms and others. So the Sharia scholars look at the image of the public and they do not allow these companies as Sharia compliant. So that's all on the criteria of Sharia compliant companies. And if we look into Malaysia's Bursa Malaysia, so we can see that from 2009 to until now, there are a substantial amount, more than 75% of the companies listed in Bursa Malaysia are Sharia compliant. Like in 2019, there are a total of 929 public listed companies. Among them, 714 were Sharia compliant. At the end of 2020, at the end of February 2022, there are 952 public listed companies, where 753 of them are Sharia compliant. So it is 79.10%. So it's actually increasing. So it is a very positive that we can see that almost 80% of the companies listed are Sharia compliant. So with that, I thank you for your attention. So I have already discussed Islamic money market, the importance of Islamic money market, how they are different, and how the interbank Islamic money market takes place based on Mudaraba and Tawarruq. And also I have discussed one of the instruments of interbank money market, which was a GII. And then I also have discussed the Islamic capital market, the share market or equity markets, and I have showed you that how the Sharia screening is conducted in Malaysia to list a company share as halal share. So that's all for today. So thank you for listening. And if you have any comment or any question, you can ask in the comment section or in the respected Telegram group. And this is the further reading. So to understand further on the shares, Sharia compliant share screening, as well as to know more on Islamic money market instruments, you can read to the ISRA's book. So with that, I thank you. Yeah. Assalamu alaikum wa rahmatullahi wa barakatuh.